All right, so let's get started this evening. We're just past the bottom of the hour here. So welcome. This is another edition of Thirsty for Knowledge Thursdays, brought to you by the Aries Foundation for Financial Education, Inc. This week we're talking about charitable donations, but specifically more detailed, more involved with that, which we've dubbed How to Gift and Get Paid, which is all of the ways that you can benefit while giving to charity and helping those charitable organizations, causes, whatever is near and dear to your heart. Before we on time. And speaking of your pilots, I am Tom Alessi. I'm the president of the Aries Foundation for Financial Education. I've been in financial services for over 21 years now. I'm an investment advisor. It means I act as a fiduciary whenever I am giving any guidance or advice to any of my clients. I'm going to bring in my co-pilot, Craig. Why don't you join us? Tell us a little bit about yourself.
Sure. So I'm Craig Richardson. I'm the vice president of the Aries Foundation. I've been in the financial services field for a little over 16 years, and my specialty is working with families and small businesses to help them define their goals and come up with a financial plan for themselves.
Absolutely appreciate that. And Craig will be chiming in as we go along here in the presentation. But also, as I said, any questions, put them in the chat box because he'll answer them that way as well. Some disclosures before we start. First, this presentation is meant to be purely educational. The Aries Foundation for Financial Education, Inc. is a nonprofit. We're not affiliated with any broker-dealer, securities-related business, and we're not a registered investment advisor. We strongly, Craig and I, the foundation strongly recommend that if you ever have any questions related to tax, legal, or financial, that you seek out the help of a professional. And in the case of tonight's presentation, we're going to be talking a lot about stuff that probably going to need to turn to your accountant, your CPA, if you're trying to take advantage of how some of this stuff works, because it does get a little, that was a lot of words for me. So I am so happy that we serve drinks on this flight. And tonight, as I had said to my partner, I am drinking something in his honor that is called Never on Time from our friends up in Vermont at the Magic Hat Brewery. It's described as a bang-up pilsner with a biscuity body and a light floral aroma. So I'm certainly excited to try this one. Craig, what are you drinking this evening?
Actually having a Cayman Jack margarita.
Wow, look at you. There's going strong right there. I am, so our goal here with this, we call these, Thirsty for Knowledge Thursday, but we affectionately refer to it as Think with a Drink, because our goal is to deliver education in an informal and relaxed, casual setting. And we can't think of a better way to do that than if we have something to sip on as we're going through all of this. So sit back, enjoy the ride, skål. Okay, so the agenda. We're going to talk about so let's get into that. So the CARES Act, which I know it was, COVID relief and some other pieces in terms of, bringing that up, but I'm not going to go into what the CARES Act actually stands for, was 2020. However, the new stimulus, the Taxpayer Certainty and Disaster Tax Relief Act, whoever came up with the name for that, I have no idea, because that one definitely does not roll off the tongue there, extended some of the some things that the CARES Act had in place, but specifically what we're talking about is charitable deduction. It kept the above the line deduction, right? So now why is this so important? Because most of us in today's world we're not itemizing anymore because of the standard deduction. So an above the line deduction means it doesn't factor in there. It's in addition to your standard deduction. And that's $300 for a single filer cash contribution to a charity or charities. It can be as many as you want, up to 300. It's an above the line deduction.
600 $1 a piece.
Huh?
I'll give 300 charities $1 a piece.
300 charities $1 a piece. If you so to do it that way, it's however you want to break it out. It's $300, $600 for a married couple. So this is a good thing. It's an extension of that same thing. We're not going to go into for itemizers because it's a little too detailed and And, the percentage of the art of this says, don't try to hoodwink your uncle, right? Because here's the thing with this is you can say, hey, I made this cash contribution to a charity, but if Uncle Sam comes after you about this, the penalty has increased because they realized they were opening themselves up for everybody to say, oh yeah, I gave $300 to a charity. Sure. Here's what I did. All right, so now we're going to get into the give and get paid portion of this. And the first one we want to look at is an annuity, right? So the idea here is that you have an asset that you are going to donate to a charity. Okay, so it's a simple thing where I'm gonna donate an asset to a charity irrevocably, right? We've talked about this in the past. This is I'm giving it away. I don't own it anymore, right? It's no longer in my control. So I'm just transferring this to the charity. What the IRS says in that situation then is that I can then take a deduction, based off my giving this away. I can get this federal charitable tax deduction. There are some limitations in there in terms of how much you can actually qualify and do. Again, that's why you need that tax professional, right? Which gets us into the next part. Right now, we're looking at this from that. So that would be an annuity. So in the charitable remainder world, they're called CRATs and CRUTs. CRAT is the charitable remainder annuity trust. A CRUT is a charitable remainder uni trust. Just to follow along here. So you are huh?
So they both sound like something you just stepped in.
Yeah, I know. It's not pleasant in terms of how that sounds, but it actually works out very well for you, right? So this is the idea where you've got that appreciated asset. So again, the share of stock is usually the issue there, where you've held it for a long period of time and it's gone through the roof, and now you have all of these capital gains that you would have to deal with. So what you can do is you can donate it to the charity. Right? The IRS says, okay, we'll let you do it again with certain interest and certain limitations to that. And then you are going to transfer it to this remainder uni trust. So this charitable remainder uni trust is where you're going to put that asset, right? So then the asset is going to pay you income for the rest of your life, right? So they can actually do this in several ways, but the trustee basically has the ability to sell the asset, again, take that capital gain off the table and purchase something that would essentially pay out, almost like the annuity version of that, that's going to guarantee that there's going to be payments for the rest of your life.
So it's very similar. It's just a matter of what funds you're using to purchase it with.
Well, no, it's how you're setting up, where the annuity is just going straight to the annuity. This is where you're using the uni trust to do it.
Okay.
Okay. And so then now what you want to do as the donor, right, is you've got beneficiaries who were counting on that Amazon money, right? They wanted that money. So what do? You set up a life insurance trust, right? Otherwise known as an ILIT there, right? Irrevocable life insurance trust, otherwise known as an ILIT. The donor uses the income from the CRUT, that money that's coming back, to fund the premium payments on the donor's life that goes into the ILIT. And then the ILIT will then, that premium payment that comes over, you can basically do that through gift tax, essentially, unless it's more, but generally you can do it in terms of the gift tax exclusion. So you're not paying taxes on anything. And then what's left in the CRUT after you passed, again, that sounds terrible to say.
That's what I said.
But what's left in the CRUT after you pass away goes to the charity. And then the money that's sitting in where didn't that go? Oh, there we go. Okay. And then the money that's in the ILIT when you die passes to your beneficiaries, to your heirs. All right. So let's get into pre-tax money. So some of the things so last year with the CARES Act 2020, you did not have to take required minimum distributions, minimum distributions. So this year, 2021, that light turns back on and everybody's got to take required minimum distributions. So now we're talking about how to use those required minimum distributions to benefit a charity. So one of the things you can do is you can donate the IRA asset to the charity itself. One of the nice things here is they left the threshold at the previous required minimum distribution age. That used to be 70 and a half. This goes back now to the Secure Act of 2019. It's a lot of acts in the last 3 years that have just piled up here.
Doing a lot of acting. Yes.
Yeah, so Secure Act changed required minimum distributions for everyone who has not started to take their RMDs to 72. However, for the case of donating to a charity, that remained at the same age prior, which was 70 and a half. So if you're turning 70 and a half in 2021 or in 2022, you can donate to charity. You don't have to wait till 72 to do that, which is where it used to be. All right, so now we're going to go to life insurance, because this really gets into, some of the things that you can do here with life insurance as far as donating to charity. So let's say you have a policy. Okay, so I've got a policy that's available. You can just name the charity as the beneficiary to your policy if you so inclined. Maybe you only had your spouse, didn't have any kids, and your spouse predeceased you. Well, you can change the beneficiary to be the charity. Mm-hmm. Simple, easy to do, right? You can gift the entire policy. You can just make the policy and change the owner of the policy to be the charity itself and the benefit. One of the things with policy is funny, the new ones, there is actually some providers out there who have a charitable gift rider that you can add on to the policy. Now, it does come with limitations in some cases. There's a certain face amount that needs to be written, like 250,000 or so on the total death benefit. But then you can put this rider on, and a lot of times the rider is no cost. You can just the other one there is this survivor purchase option, which Craig and I spend a lot of time talking to people about, what we call SPO with this. But what SPO does is it gives you the opportunity to, if you're a couple, you can have policies where upon your passing, your spouse then has the ability to take out a policy. And Craig, you said it was like up to 5 times the face.
Actually, up to 10 times the original face amount.
Up to 10 times the original face amount. So if you do this out in terms of thinking this from I'm trying to leave a legacy to my family, but I'm also trying to leave a legacy to a charity. If I pass, my proceeds go to my spouse. My spouse then has the option. She's got a policy on her that's going to take care of the family, to then turn around, use some of those proceeds to fund a policy that she can designate to go to a charity, because we use this a lot in the special needs planning. Because it's a great way to then have a fund that goes to the special needs trust in that situation. And definitely sets up for that. So it's definitely something to explore. Again, this has to be a new policy, so you'd have to take that out, because this is a rider that has to be done at the time the policy is issued. But it's definitely worth having the conversation to see if it might be available. Which gets me into the next part, which is, if you want to explore this, spend a little time with it, or figure out whether or not this makes sense for you. If you come to us and we go through and do a policy with you, we'll actually give back, we'll contribute along with you. And we do that, it's through a planning process. It's the only way we know to do it. And for us, for everybody, we offer it as a complimentary process. There's no cost in your worth. Craig, any questions in the audience?
No, I think we did a great job. And I think you let everybody know too, that we did not crash the Bitcoin market. That was not us.
Yes. Yeah. Yeah, we had nothing to do with that in terms of still crashing, by the way. And then,
Watch our last webinar, right?
yeah, losing footing very quickly, unfortunately. So if you do have questions, ask us. We can help with that. Reach out. You can go to the website, www.ariesfoundation.org, or, an email. It's info@ariesfoundation.org. We're happy to help out in any way we can. We certainly appreciate it. Have a great